Quickbit has been a source of excitement to many traders and investors lately, but how strong is it really? What obstacles lay in the way, and when is it bullish for real? As anyone knows who follows this channel, my prime focus for 2021 is Bitcoin, and there's a good reason for that, and that's because I expect Bitcoin to move more than any random stock around and at less risk. And to those of you who both want to know more about this and who want to get a thorough deep dive into Bitcoin, both as a phenomena and as an investment, I highly recommend you to watch this 2021 Bitcoin series. But just because I focus on Bitcoin does by no account mean I don't keep an eye on individual stocks and the market as a whole. For as mentioned in the previous Bitcoin episode, I will look into releasing the entirety of my marathon position as well as a good chunk of my Bitcoin and Ethereum holdings, however temporarily, if Bitcoin were to reach the technical resistance that I laid out in full. If this were to play out, yes, if, for we don't know, then I'd of course look at busying my money somewhere else in the meantime. This brings us to this episode, to Quickbit. But first and foremost, not financial advice, and nothing of what I say is a recommendation of any kind. This episode, as well as any content on this channel, is for entertainment purposes only. And if you like what you see, then please return the favor by hitting the like and subscribe buttons. It greatly helps the channel and it makes it easier for me to know what content you like and what content you don't. In this episode, we'll look into the Quickbit technicals for a sound strength approach. To those of you who've been around this channel since the early days, you know I was literally all in Quickbit for some time, and we're talking over the course of a couple of weeks or so until the technicals began showing signs of bearish reversals. And as much as I didn't like to or want to be all in, it was one of those spots where I was left with no choice. I'm not gonna go over the reasons for that again, as I've laid them out twice already on this channel. What I am gonna talk about, however, is why Quickbit is now mature for some serious contemplation. Starting off on the weekly chart, we have a big descending triangle, and statistically this is a bearish formation, and we did in fact get a minus 27% breakout earlier this year. This, however, proved to be a fake out, and as we know, fake outs have a strong tendency of shooting violently in the other direction. In fact, fake outs are your friend, for if you can keep your head straight and think rationally, there's a lot of money to be made on them alone. In this case, Quickbit has already shot up by more than 130% in little more than 2 months, and this move right here was confirmed early on by the lower bullish red close on the weekly, which on its own has already generated some 65% in profits at most and at an absolute minimum risk. The previous time we got a lower bullish red signal was in March last year, amidst the corona bottom, at which Quickbit generated a maximum of 72% in profits in less than 2 months. And again, to those of you who still haven't watched it, I strongly recommend you to take a look at the RSI trilogy, as it will fully equip you with the most deadly killer tool out there. You're welcome. Now, despite the fake out and RSI buy signal, there are some dark clouds in the near future, and some quite heavy ones at that. For as remarkable as the fake out and RSI clues may be, they have already handsomely rewarded any attentive market participants out there. Now is rather the time to get realistic. First of all, let's get back to that old triangle of ours, for even if we were to get a northbound outbreak, which is in fact even more possible now given the fake out, I am personally hesitant at best at basing any trades solely on a diagonal line, unless I really have to. And the reason is simple. For as discussed many times before, diagonal lines are always discretionary and can be redrawn based on any new data points, and this makes them unreliable. Horizontal lines, on the other hand, that's a completely different story. In this case, all of these triangle versions qualify for technically justified. I don't know about you, but I find that to be confusing. It rather turns into one of those cases where you know what you should have done once there are no new data points to alter its formation. But then it's too late, for the train has since long left the station. And this is actually one of the deceiving parts about technical analysis, as inexperienced traders easily get tangled up in disinformation. And equally so, whatever final triangle they see comes across as deceivingly crystal clear, which it wasn't whilst in the making. For that reason, I will not base any entry level upon the triangle and its diagonal line alone. Luckily though, we have more tools at our disposal for that, but more on that in a bit. Now, the second dark cloud that needs to be overcome is the upper bearish blue RSI line. And as of producing this episode, Quickbit is trading right at it. The previous 2 times this has happened, the stock dropped by -55% and -63% respectively. The upper bearish blue line can best be described as an incorruptible watchdog made out of non-meltable iron that kills any sneaking bear that poses a threat and who looks to steal from your portfolio. It's the fire alarm that bawls loudly right before the fires even started. And this right here is a major warning sign to me, and any closing on it would be an utterly bad omen. Of course, this signal can just as easily be disqualified if the RSI were to close above it with enough safety margins. If that were to happen, then it's all good, no worries, but until then I'd thread carefully, especially since Quickbit has yet to prove itself. For what we have up until now is a long series of lower highs, and just because the stock has rallied a bit lately does by no account mean this is the time when magical sparks will fly. For as optimistic as you may feel right now, people felt the same level of excitement at each previous local top. Surely things will reverse at some point, we just don't know when. And until we know, this right here remains a high risk and low reward area that no trader should ever look into buying at. For this right here, this is where the so-called stupid money buys. I don't quite like that term personally, however there's a reason why it's called just that. And while we're still dealing with the RSI, the weekly RSI never entered a bearish channel. For technically, it's remained bullish throughout this heart attack looking drama. And anyone who's been invested in Quickbit over the last couple of years know exactly what I mean by heart attack drama. Moving on to the next dark cloud, which ironically is just that. We're talking the Red Ichimoku Kumo, which lays like a heavy blanket right above us, just waiting to come pouring down with another monsoon to drain any unassuming entries and premature optimism. This certainly is an issue, and as we can see, it will remain bearishly red throughout most of the year. In this sense, even if Quickbit were to overcome the upper bearish blue line, there's another layer of resistance just waiting to pull a punch. And the problem with this is that the technical resistance requires energy to overcome, and the more resistances we pile up, the more difficult it becomes to do just that. The final technicals we'll look at are the horizontal resistance zones above. And as the Swedish Quickbit stock isn't available on TradingView, we cannot see the VPVR, as in where the volume weight resistance lies. However, looking at the regular charts, we can see that Quickbit has 2 recent local price tops at around 12.50. This in turn is historically strengthened by some reversal price action. In this sense, we can expect some significant horizontal resistance in the 12 to 12.90 zone. And mind you, this is right above the Red Ichimoku. So even if the price were to overcome the Ichimoku, there's a new big boss it'll have to fight. But once the stock manages this, it'll have broken a 2-year-long bear trend by setting a new higher high. And that would absolutely be a bullish characteristic. On a good note, however, if Quickbit can overcome the upper bearish blue line, the red Kumo and the resistance box, and if it can achieve it at strong trading volumes, I think this might be the long sought after break for Quickbit. And if this were to occur, I would not be surprised if the stock were to quickly move towards new all-time highs. Sure, we did get a lot of trading volumes throughout this weekly candle. However, that was just fuel enough to propel the price right towards the diagonal resistance. Now, for this to really take off, it needs to be accompanied by just that, volumes. And why is that? Well, this is where technical analysis really gets interesting. For what we see on a chart is not mumbo jumbo, it's a visual representation of the market sentiment, as in how optimistic, excited and hopeful the market is about Quickbit. For if we get rising prices but with no real trading volumes, that literally means that the masses are by no means convinced about Quickbit. Some tiny groups of people may be, and they may be fanatics for all I care, but when it comes to butting heads with the majority, their skulls will quickly be crushed. Strong trading volumes, on the other hand, tells us that the majority of Quickbitters finally and collectively see a bright future for the company, that their worries are over and they look positively on the future. And this is also exactly what an accumulation phase does, and even though this here is not what we technically refer to as an accumulation, it still holds similar characteristics. In this case, we're talking 2 years of indecisiveness during which the company and its investors try to reach some sort of a consensus of where it's all heading. And these things take time. Now, before discussing where Quickbit will become a strong buy in my opinion, some viewers may object to my not bringing up the moving averages. Well, there's a simple reason for that, and I won't stall at it for long. Moving averages, where the simple or exponential are nothing but noise when an underlying equity or asset, or the Quickbit stock in this case, is moving without a formation, a sideways range, a consolidation, or the alike. No, moving averages are only relevant and interesting whenever something is trending. Sure, they can still amount to some sort of a support and resistance in the aforementioned situations. The problem is you just don't know when. In this sense, they're like the discretionary diagonal lines. You won't know until afterwards, and only then will they deceitfully come across as obvious. Just like whatever last outcome at a roulette table immediately feels obvious once it's taken place. Putting all of the pieces together, there are significant resistances above the current levels. That doesn't mean though that this isn't the time for a breakout. It might be, it might not. But from a statistical point of view, I'd personally not invest a single dime until Quickbit manages to overcome the final resistance in this weight-wise heavy cluster. For after that, there's basically no resistance whatsoever. For this right here is exactly the type of buy spot you should be looking at as a technical trader. And given how long it's been since the one-off all-time high at 2050 took place, I don't expect it to be of any resistance at all on its own. If, however, Quickbit were to form a reversed head and shoulders, which by the way is very much in play, then the technical target would be at that very level, as in perfectly aligning with the previous all-time high. Then it would amount to a technical resistance, but not necessarily because of the all-time high itself, but because of the head and shoulders. And in a way, it would be more explosive for Quickbit if it were to not form a head and shoulders on its way up, as it would then be subject to no relevant resistance at all. So here's my summary. This here is not the time to get excited. Quickbit still has to overcome the upper bearish blue, the red Kumo and the 12 to 1290 zone of horizontal resistance, which on its own would amount to a new higher high, before we can look into buying with confidence. And in this sense, anything above 13 kroner and ideally at strong and convincing trading volumes is the low risk, high return spot for a long entry. For this area right here is what any investor in trader should be drooling at. Some of you may protest and say, yeah, but then you missed out on 25% of the value. To those of you I say, you might do wise in getting that erroneous notion out of your head. What's most likely gonna happen is that the price will get rejected at any of these resistances, plunge right back down and lose you money instead. And in that case, we're likely talking more than 25%, and your money will once again be stuck in another god knows how long round of waiting, during which your money could have been put to much better work somewhere else. Let me therefore leave you with these final words of wisdom. Those 25% you may miss out on in case Quickbit were to break out is the very premium you pay to not fuck up your portfolio. That was all for now. Thank you and goodbye.